Nikola hit a $34 billion market cap with zero revenue, zero working trucks, and one video of a semi coasting downhill with no engine. 0.02. Visual lock, NKLA ticker, surging past $65 share on June 9, 2020. Ford's NYSE board visible beneath it, a company with 117 years of real vehicles worth less than a startup with a gravity-powered prop. June 9, 2020. Nikola's stock closed at $65 a share. Zero trucks delivered, zero revenue, zero working prototypes. For one session, its market cap touched $34 billion, surpassing Ford, which had been building real vehicles since 1903. Then, a short seller firm in New York published 67 pages. And later in this story, I'll show you the single decision that made the whole thing possible, and why it won't be the last time it happens. Rewind to 2016. Trevor Milton, a high school dropout from Grantsville, Utah, the same small town that would later become a crime scene, incorporated Nikola Motor Company in Salt Lake City. His pitch: hydrogen-powered semi-trucks that would make diesel obsolete. Milton had already failed at 2 prior companies. But here's what almost nobody covers. His first startup, D-Hybrid Systems, was acquired for a reported $3.5 million, and he walked away with almost nothing. He needed a much bigger win. So, he built one on paper first. He raised $100 million before constructing a single functional vehicle. He named the company after Nikola Tesla, banking on the association. Elon Musk did not find it flattering. In 2016, Nikola released a promotional video called Nikola One in Motion. It showed a massive hydrogen semi cruising smoothly down an open highway. Professional cinematography, no visible effort. The implication was unmistakable. This truck worked. Now here's the part that will reframe everything you just watched. The truck had no functioning powertrain. A production crew towed it to the top of a private road on a hill in Grantsville, Utah, angled it downhill, and pressed record. No engine running. No hydrogen fuel cell active. Gravity did the driving at roughly 5 miles per hour, while cameras rolled at ground level to make the speed look greater. Milton later claimed the footage was never meant to deceive, that the video was about showing the truck's exterior design. The federal jury that convicted him spent about 2 seconds on that argument. That video became Exhibit A. Nikola went public through a SPAC merger, a special purpose acquisition company, which is essentially a blank check shell that buys a private company and takes it public, bypassing the due diligence a traditional IPO requires. The deal valued Nikola at $3.3 billion at closing. Retail investors piled in. The stock tripled in 2 weeks. Then General Motors announced it was taking an 11% stake in Nikola, and that single press release added roughly $6 billion to Nikola's market cap in one trading session. Now stop, because this is the moment the entire fraud scaled. Milton went on CNBC, calling GM's involvement proof that hydrogen trucks were real. He held shares then valued at over $8 billion on paper. Most retail investors assumed the same thing. Where GM puts its name, there's a real product, and that changes everything. Because what GM had actually signed was a non-binding letter of intent, with no cash committed yet. Hindenburg Research, a short-selling firm named after history's most famous corporate disaster, published a 67-page report titled Nikola: How to Parlay an Ocean of Lies into a Partnership with the Largest Auto OEM in America. Hindenburg cited the rolling truck video. They flagged Milton's claims that Nikola owned natural gas wells the company had only a minority interest in, not outright ownership. They detailed false statements about in-house manufacturing capabilities Nikola didn't have. The stock fell 11% the day the report dropped. Milton resigned 2 days later. The SEC and DOJ opened simultaneous investigations. But here's the buried detail most outlets skipped. GM quietly renegotiated its deal, removing a $2 billion component from the original agreement, the part that would have required GM to manufacture an electric pickup for Nikola. The validation that proved the company was real was quietly unwinding before the ink was dry on the headlines. Milton was gone. The federal machinery was just getting started. In July 2021, federal prosecutors in the Southern District of New York indicted Milton on 4 counts: 2 counts of securities fraud, 2 counts of wire fraud. The indictment detailed specific false statements Milton made on Twitter, in podcast interviews, on CNBC, designed to inflate Nikola's stock while he held billions in shares he couldn't sell freely due to lockup restrictions. Prosecutors called it a pump and dump executed via social media. Milton's defense argued he was an over-enthusiastic communicator who genuinely believed in the company, not a criminal. The trial ran 4 weeks in Manhattan. On October 14, 2022, the jury convicted him on 3 of 4 counts. He faced a sentencing range of up to 11 years under federal guidelines. And I'll tell you what actually happened at that sentencing, and what happened after in a moment. But first, while Milton was on trial, the actual company was trying to make trucks. Ordinary Americans who bought NKLA between June and September 2020, the exact window prosecutors identified as the fraud period, watched the stock go from $65 to below $2 by late 2022. That's a 97% collapse. More than 14,000 trucking reservations had been cited at Nikola's peak. None of those customers received deliverable vehicles. Meanwhile, Milton had sold shares worth hundreds of millions in the months before the Hindenburg report. His attorney acknowledged at trial that his net worth had dropped significantly by the time the verdict came in, but he walked out of the Manhattan courthouse on bail while retail investors had no equivalent exit. The founder got a years-long runway to litigate. The investors got a 97% loss and a class action lawsuit that for most of them paid out a fraction of what they put in. That asymmetry between founder outcome and investor outcome is the actual story of Nikola. And it doesn't end at the courthouse. In December 2023, a federal judge sentenced Trevor Milton to 4 years in prison, well below the 11-year range the prosecution had argued for. The judge cited Milton's charitable contributions and expressed partial skepticism about the government's victim loss calculations. Milton remained free on appeal bond. Then, in January 2025, President Donald Trump signed a pardon for Trevor Milton, one of hundreds issued in the early days of his second term. Milton had donated $1 million to Trump's inaugural fund in late 2024. The pardon erased the conviction entirely. The jury verdict, the 4-week trial, the 3 guilty counts, gone. Legally, Milton was no longer a convicted felon, and the investors who lost real money in 2020 had no equivalent mechanism, no pardon for a 97% loss. In February 2025, Nikola Corporation filed for Chapter 11 bankruptcy in Delaware. Assets, $524 million. Liabilities, $908 million. Fewer than 600 trucks delivered across the company's entire commercial history. General Motors had dissolved its partnership years earlier. The Arizona plant, built partly with public incentives, was listed as a potential asset sale. Employees who had nothing to do with the fraud lost their jobs. The hydrogen semi-truck revolution Milton described in television interviews, the clean energy future that retail investors funded with their brokerage accounts, was now a line item in a Delaware bankruptcy filing. A $34 billion company at peak, auctioning equipment at the end. Here's what Nikola actually exposed. The SPAC structure that took it public bypassed the SEC scrutiny a traditional IPO requires. No investment bank asking hard questions about a truck that needed gravity to move. After Nikola, the SEC overhauled SPAC disclosure rules, mandatory sponsor compensation disclosures, liability standards matching a traditional IPO. The SPAC market, which peaked at 613 deals in 2021, fell to under 100 annually by 2023. Nikola handed regulators the case study they needed. The rules changed. But the pardon is the part the new rules don't address. Because if a securities fraud conviction can be erased by a $1 million political donation, the question isn't whether Nikola was a cautionary tale. The question is, who's watching the next pitch deck right now, in a SPAC filing somewhere, and deciding the upside is worth the risk? Nikola opened at $34 billion and closed in a Delaware bankruptcy court. The truck that launched it never had an engine, just a hill and a camera. The conviction got pardoned. The investors got nothing back. And the one question that stays open: if a $1 million donation can erase a securities fraud verdict, what exactly stops the next founder from filming his truck rolling downhill?